we're going to go over the adjusted trial balance here. So what I'm going to do is I'm actually just going to copy and paste what I have here, but not copy in this case, yeah. So I'm going to copy all of this, okay, and paste it over into here. Actually, I should copy the numbers too. Okay. And paste them in here into our adjusted trial balance. Okay. And I'm actually going to push it down just because I want to have enough space to be able to see everything. Okay. So the adjusted trial balance, right? We can just double confirm what is true, and then you know, go through the accounts ourselves one at a time. Okay. So, for instance, but I do believe that when we did our adjustment entries, we only tapped into 3 things, but that's okay. We'll just go through every single account balance just to ensure our accounting is correct. Starting with the checking account, right? It's still at $11,199.21, so that one hasn't been touched. And cash is still at $2,356.89. That we haven't touched. The accounts receivable, there is nothing there. What we did add are coffee mugs for $22.50. Okay, and our supplies, we adjusted them by 15. Okay. So in this case, right under cash, I'm going to add in an account for the coffee mugs, okay, for $22.50. And again, we just said that the supplies are now $50. Okay. So cash, coffee mugs, no, accounts receivable, coffee mugs, $22.50. We have the supplies for $50. Okay. Cash register set still at $285.60. Okay. But we have an accumulated depreciation for that $7.93 on the credit side. Okay. And yes, so let's see what we did there. Okay, so here we need to add in another account for the accumulated depreciation here.
Hey, I'm back. I'm sorry, I was changing a diaper.
No worries. Okay, accumulated depreciation for the register was for that $7.93 on the credit side. Okay. All right, and let's see what's next. Sales tax is still at $40.52. Business loan is still at $15,000. We don't have any equity or income summary. Sales is still at $509.15, so no changes there. Sales returns is still at $17.97. Cost of goods sold is what we have to add in here for $109.50. Okay, so after the sales is the $102.50 for the cost of goods sold. Okay, and then freight expense is 0 and purchase expense is 0. Okay. So let's see. Sorry, I I lost it. Here we go. So in the case after sales, we have cost of goods sold. For 102.50. Okay. Freight expense and purchase expense are zeroed out. So you can either choose to keep it or you could choose to delete it. So in this case, I'm going to delete it. Okay. Okay. So there you go. So cost of goods sold, right? Purchase expense and freight expense were deleted. So we got sales, sales returns, cost of goods sold for 102.50. Freight expense was 0, purchase expenses 0, purchase returns and allowance, there's nothing there. Rent expense is still 1,500, and then we have supplies expense for 15 and depreciation expense for $7.93. So we need to add two more entries in here. So in this case, we have the supplies expense for the $15, and we have the depreciation expense for $7.93. So again, you're going to have to tally up your totals. So in this case, right, let's see what so for the credits, we got $9.93 plus 40.52 plus 15,000 plus the 509 and 15 cents. So that should give you an increase of credits to be 15,557.60, and of course you can double check your work on the other side. So let's see. Okay, starting out with the 11,199.21 plus the 235,689, okay, plus $22.50 plus 50 plus $285.60, okay, plus the 1797 plus 102.50 plus 15 and plus $7.93. Okay, I think I made a typo here. I got 14,557. Am I missing a number? Oh, plus the 1,500. Huh. Gives me a total of there you go. I have now 15,557.60, which is correct because it pans out even on both sides, debit and credit. So I got $15,557.60 worth of debits and credits after the adjusted trial balance. Okay. Now it's going to be step 8, which is the financial statements. Okay, so financial forms. Now, because the complexity of your accounts isn't as, massive as Coffee Cafe, you're fine just using all these accounts because this is going to give you pretty much everything that you need, right? So starting out with the income statement, right, that deals with your sales, right? So we got to figure out what was your operating income. Well, in this case, how do I what do I generate here? I have sales. Okay, my sales gave me a grand total of $509.15. Okay, but I also had a sales returns and allowances, which decreased my sales, right? Okay, it decreased it by $17.97, right? Your sales returns. Okay. You also need to counter against, right? So if you want to, you can say this is your total sales. Okay. And then I will right align it. So your total sales here is going to be, right? Your 509.15 minus your $17.97. 509.15 minus 17.97 will give you a grand total of $491.18. That's your grand total sales, right? In order for you to get your gross profit, you need to take out the direct cost of goods sold, which is directly correlated with the inventory items that you sold, right? And that is going to be the $102.50. Okay, so that's going to give you a gross profit of $388.68. Okay. Then you're going to have to list out all of your operating expenses to get your grand total here. Okay, so in this case, you only had rent, supplies, and depreciation. So I can copy all of this. Cost of goods sold, right? My expenses were rent, supplies expense, and depreciation expense for these grand totals here. Okay, so again, so your grand total operating expenses is going to be 15 it's going to be a grand total of 1522.93. So that means, right, you got a loss. You have a loss of $1,134.25. Okay, let's double confirm that. 388, okay, 68 minus your 1522.93. Okay, and you're going to get your negative $1,134.25. Okay, so you took a loss. So what happens when you have to take a loss? In this case, you have to take it out of your equity. Okay, so let's see what your equity was at the beginning of August. In this case, Did we even have equity to begin with? No, we didn't even list it on our balance because we started out with a loan, which is a liability. That doesn't increase or decrease your equity because it isn't an investment, right? You didn't take you didn't your company started at zero. So in this case, that's exactly what I'm going to record is my beginning balance as of August 1st was zero, and then I just took a net loss, okay, which decreased your account by 1134.25. So that means your ending balance in equity as of August 31st is negative $134.25. So not so good for a start of a company, right? We didn't have any owner's withdrawals or capital contributions. So in this case, nothing affects anything in here in this case. So there you go. You are at a negative account balance. So then now, once again, we need to now put in our balance sheet in here. So let's see. I can simply just copy the accounts from here. All right, because I have a checking, coffee mugs, supplies, and a cash register. Okay. Those are my assets. Now, my cash register, right? We need to include the accumulated depreciation because we need to look at its fair market value. Okay. Now, what you can do too is you can include it and have it as a separate thing right here. It's not going to be part of the total cost here, or in this case, it's not going to be part of your assets, right? It's going to be reducing your assets. You can do that, but in most cases, the better way to do it is to just take it out from the register itself for the $7.93 to get the fair market value here. So therefore, balance sheet, I have to adjust this so it is looking at book value. So I need to calculate right here what $285.60 minus that accumulated depreciation will give you a book value of that cash register to be $277.67. Now again, you can have it on the side. It just wouldn't count as part of your assets because it reduces your assets, right? That could be something that you can consider as well. All right. So then you can go ahead and tally up your totals here to get your total assets. Okay, so in this case, I got a grand total assets of $13,906.27. Okay. My liabilities, I believe I only have a business loan. Yep, just the business loan for that $15,000. Okay. And then my equity, which we solved from the previous one, gave me a negative $1,134.25. Okay. So let's see what your total liabilities and equity are, right? That's all I have for these accounts. I only have, let me see. Oh, wait, I do actually have the liability of the sales tax. I'm sorry. So we have accumulated depreciation. We got the sales tax. I have to include the $40.52. That's what I was missing. Okay. So you got the business loan, and you also have the sales tax payable. Okay, of the $40.52. Okay, so then there you go. Let's calculate how much my grand total liabilities and equity are. So in this case, I got $15,000 or 15, 40, 52, right? Minus that 1134.25, and I get a grand total of that 13,906.27. So in this case, they both equal on both sides here. Okay. So again, if you decided to do it this way, where you had the accumulated depreciation, just remember that decreases your assets. So you would have to add these all up and subtract that depreciation, accumulated depreciation, to get this answer here. Okay, so that is what I'm at right there. And then last but not least, you need to close your books and then do the post-closing trial balance. Now in this case, I left it blank just because this part is something that you can do on your own, right? All you have to do is just zero out all of your expenses, all of your revenues, and then deposit them into the income summary. Actually, let me see, we do have some time to do it, but in this case, it's already 11 o'clock. So again, use the coffee cafe to be able to close the books properly, right? By zeroing out all of your revenues, all of your expenses into income summary, and then taking that income summary and zeroing it out to equity. And then you should get that. You should be able to match your equity to that negative 1134.25. That should be your matching point there. Okay. What I'm going to do is I can post the answers for the section here for the step 9 and 10 to close the books, so you can correct it on your end. But other than that, that is it for today's lesson, okay, or review. So be sure to